Ah, it didn't crash. Whoop, whoop. We didn't crash. So, content, there's the alert that I'm live. And we'll go and monetize this mofo. Save. There we go. Live chat. Woom, woom. Morning, Chris. I got a bunch of social requests, and I'm going to put scans down. Okay, let me turn on my do not disturb. Let me go get my water. Is Daisy out there with you? Yep, she's under the desk. I don't know why you insist on being under the desk. Thanks, Mark. I thought that newsletter was pretty good. I thought that was a good strategy. B, it outlined everything pretty clearly. I didn't get an ad. Why did I not get an ad? Let me see. I should have gotten an ad. YouTube Studio. Content. Live. It should be on. Yeah, it's on. Okay. Yeah, I thought it was good, but I hit it out of the park sometimes. Other times, for certain people, it's like yawn. But I did get 4 or 5 direct messages this weekend from people on Substack who are paid members. And if you're a paid member and you email me, my response time is like 30 seconds to a minute. I try and make sure that I get that done. No, we're going to do 20 times. Save edits. I've got an alert, just so everyone's know, for Amazon. I think I'm going to buy more Amazon. It closed above the 188. I think it's ready to take off, but Lord knows. I don't know. It looks interesting. I mean, that chart, we have a nice cross up. So AMZN, MPLX, and Google. I mean, Amazon and Google look ready to go. I mean, Google, you got the Bollinger Bands that cinched up, and then you had this nice big candle. I talked about that MACD on the weekend newsletter. I think they're ready to go, but I don't know. Your guess is as good as mine. Target's ready to go too, I think. I don't know if I sold out of my Target yet. I know I have a alert to try and sell out. Lily's up 1%. SMCI's down 2%. SMCI is one that I'm slightly worried about. I think there might be a little bit better place for the money in the chips, like maybe Micron, which is having earnings this week. AMD. AMD's nice. I talked about this one. I don't know that it's 100% like right now it's going to take off, but that's a nice one to look at. Brokerage. Let's go to Bitcoin. There's going to be nothing in Bitcoin that crossed up, I don't think. Morning, Joe. No. Should probably bring up Bitcoin, but nothing in the covered calls. Energy names. Probably have a few. Nope, nothing. Leveraged ETFs. Ho ho ho. Leveraged ETFs. SPXU, SQQQ, URTY, HIBS, PSQ, SDS, TBT, TECS, FNGD, BERZ. There we go. There's quite a bit. Low Cost Vanguard, VXF. I don't know what VXF is. Is that the total? Extended market. What is VXF? Let's see. VXF. See the holdings. Ooh. It's got 3,573 holdings. 1 year, not bad, 14%. 5 year, not bad, 42%. 10 year, it's about 9% per year. Morning, Steph. Yeah, Bitcoin just got killed. Nike, I will tell you, and I'll go into it a little bit because Nike does look juicy before earnings, except the valuation. I mean, the valuation, the growth, and the momentum. Those are the three things that are bad. Look at this. The PE extended. The gap extended. The PEG extended. Then you go to growth, and they're only growing 1.89%. So revenue growth, 3%. None of this looks good. Now, the levered cash flow year over year looks great. That looks fantastic. But again, then you look at momentum, and we have, the 3 month are down 3%. The sector's down 7%, so that's fantastic. 9 month you're up 6%. The sector's only up 0.53, but 6 months you're down 20%. So it does matter your entry point in this one. And when you take a look at the chart, it does look juicy. Even on the weekly, you're down below. Now, when you've been down below on this name, historically, I mean, we can look at the monthly and just bring it back. You're back to what? Where you were. I mean, I always say this. Look at where a stock was trading before the pandemic. Because some of the cyclical stocks, the kind of quote-unquote trendy kind of stuff, and yes, Nike is one of those, it's trading there. So I don't think it's a horrible thing to try and get in here, but I do think that you've got to realize you're not getting up to that 160. You're probably getting to the 120s at best, which wouldn't be a bad trade. But I would argue the ultimate support for you is probably around 80, somewhere around the when it started to shut down there. You can see here in 2022, it dropped down to 85. So I don't want to say that there's not downside, but if you're going to invest in Nike, just realize that that I do think you've got to wait for that turnaround. I'd rather buy it at 102 and wait for it to go to 120 than to buy it at 97 and have it go down to 85. So we got the spider sectors. Healthcare. Has healthcare been beaten down enough? It looks like it's kind of just hit that resistance at 150. The next resistance would be up here at about, it's just 148. So 146. Really hasn't moved that much at all. I had to mute because I yelled. Spider sectors. Let's look at the watch list. I have a pretty good, list of stuff to go over today too. AMD Tex. What is Tex? Terex. That must be either a alpha pick or a Motley Fool pick. Frog. Twilio. And IWM. I've said it before. IWM, you want to buy this under 200. And I do think that range kind of stays in play. It's under in the 9-day, doesn't have confirmation. The 50-day is turning negative. I just don't like IWM. And I heard a great podcast, the Compound, with Josh Brown on it this weekend. And he basically said, hey, why is anybody in IWM? It hasn't worked. Frog, PFE, Pfizer. That's going to come up. Okay. We'll just go to the Dow. Got a lot of errands to run today. I've got life jumping in front of me. Verizon, Merck, Amazon. That's from 30 Dow. You got 10% of the Dow is crossing up. The Dow's actually doing pretty well, comparatively speaking, to the other indexes, but that's because it was down so much. Kramer's back from his Montana vacation to his ranch. Monster Beverage. That's an interesting. I like PanW. I mean, I really do. Let's look at the S&P real quick. Amazon, Merck, Pfizer, BK, BMY, Schwab, NEE. I don't like MO. That's Altria, I think, isn't it? Yeah, I'm not going to do that. Medtronic, Southern Company, and Verizon. This one's been ready to blow. I mean, I think this is Georgia Power. This is who I have for power. And it's cinching up and ready. But, I mean, their nuclear spend was just, $12 billion they spent on nuclear. I've got the air conditioning running. It feels good. Algorithm makes you 21 versus buying and holding 18. That's not bad. Your average win 4%. Not horrible. Let's go to the Qs. Well, here, PanW. I think PanW is ready to go. And I think I put it on the weekend newsletter. I think I did. I think it was one of those that I said, hey, from the core portfolio. I think you cover this gap up to 360. I think you do. I mean, you got the golden cross. You got the Bollinger Band cinching up. You got confirmation. I think this was, in my mind, this reaction was an overreaction. And yes, you went all the way down to 274, and you had the chance to buy it at 274. But I'd rather be buying it at 300 above the 200-day than I would, try and time it below the 200-day. But I mean, the weekly, the MACD's low, it looks good. I think it looks fine. So I like that one. And I'm not throwing more money into it. I'm trying to get more into CrowdStrike because I already own a bunch of Palo Alto. But I'm going to take that little note out. Remove that text. And then I've got earnings calendar, 8 breakout charts from Oppenheimer. Then we've got the gap between growth and small cap is huge. I like that article. We'll look at Carnival Cruise Lines, FedEx. We'll look at NVIDIA here from TrendSpider. I mean, the resemblance is almost exact. Are we getting ready for the next one? Microsoft had its first weekly bullish MACD since November of last year. You've got, what's this one? This is Palo Alto. Call of the day, Palo Alto. We'll take that down. That one's a good one. Google, seasonally, that's just hot. Google and Amazon, getting ready to take off, I think. Interesting article. This was a good article posed by Michael Dell, and I had Microsoft Copilot summarize it. I thought it was pretty interesting. Catalyst Watch. And that's it. Okay. And by the way, if anyone wants to Google this, I would be talking about this quite often, but it's Hawktua. I was fascinated and spellbound by some of the Hawktua stuff on Twitter this weekend. It was great. And I hope that girl is living it up. I hope she's living it up because she's got nothing to be ashamed of. I hope if people shame her and do stuff bad to her, or, make her feel any less than a genius that she is, I hope she takes this moment, goes on talk shows, starts selling merchandise. I hope she does a bunch. Hawktua. I should. You know what? I should do this. I should. Okay, if you're new here, I am Gary. I am here every day. Let me see if there's anything on FinViz that I want to look at. Top gainers, new high of Sarepta Therapeutics. I mean, that one's just flying. Overbought. Let me look at I'm going to leave that one up there. Okay. Custom. Okay. I've got one dog underneath me and another dog. I don't know where she is. Let's start out with Seeking Alpha, and we'll go BTC. Okay. I'm going to hit record. If I crash, I will be right back. But we're going to start out here. I pretty much got everything that I want to go over. I'll talk about stuff. Okay. Ooh, my leaves got picked up. What is Tony doing? Oh, Tony's parking as close over there as he can. Okay. Good morning. It is Monday, June 24th. Happy Monday. You will hear references to Hawk Tua. My Twitter feed is loaded with Hawk Tua from the weekend. I'm fascinated with that woman. Absolutely fascinated with her. And I find all the memes hysterically funny. So I will be saying Hawk Tua over the weekend, over this podcast a lot. But the Qs, they need a little Hawk Tua. You need put a little Hawk Tua on that thing. We have broken below the 9-day, not extremely. In the pre-market, you are down, 0.5%. We're just a little bit extended. I've talked about it. You've got some gaps down below that maybe will hit. There's a little bit of, hey, NVIDIA has run too much. Apple's run too much. Some of the others have run too much. It is what it is. The MACD, super high, cross down. RSI is coming off of, 90, 82, 83, and you're down at 66. So you haven't come down enough. We talked about 460 being the support level. I would argue that 470 is probably before you get to 460. It is what it is. Don't expect that we're going to shoot up between now and July. But July is a 100% win on the Qs for the last 14 years, 12 years, somewhere in that. I think the last loser was 2007. So get used to it. It could use a little Hawk Tua on it. Bitcoin. I wanted to show this. Now, I my assumption is people are just taking profits, but they've been taking profits for a month. For 1 month, Bitcoin is down 9.77%. Now, for 6 months, you're up 44%. So you have some room. Timing matters. Timing matters. When you bought this one, it completely matters. You're down 6.78% in 5 days. In 1 day, you're down 5%. It's a little bit hard to sit there and take it. Now, you can look at the charts on these things. I don't know that the charts really make that big of a difference, but your 52-week range is between 24,000 and 73,000. That is an enormous range. If you start going down to 50,000, you're in the middle of it. 40 and 50,000, you're just in the middle of it. So I would expect that Bitcoin, I want to get into Bitcoin. I want some of my Bitcoin, things to actually cross up. I have a watch list in TrendSpider with Bitcoin and crypto ETFs. IBIT, I think, is the largest one. Okay, hold on. I got to sneeze. Oh, damn it. Damn it. Oh, I got to sneeze. I'll just start recording again. IBIT is the largest one. I think it's going, it doesn't have confirmation. And in pre-market, we're down 5% on this. So you're just crossing your 200-day. I'm going to play this with ETFs. I'm going to look at it. I'm not going to do anything specifically. But again, I want more access into Bitcoin, so I will probably be buying one of those, and I will be using Seeking Alpha to actually find the place that I want. So if you just go in here and you put in IBIT, which is the ETF, it's the iShares ETF. We'll go over here and look at this. You can go over here to peers, and you can say, okay, what are the other peers? FBTC, ARKB. Or if you have TrendSpider through me, you have that watch list. You can just set yourself some alerts on those. And you can go down here and you can look at, the expense ratio, 0.12. FBTC right now is 0.00. BITC, I think they're going to start raising theirs, but there's still some at 0. The one that you don't want is GBTC. That one's still at like 1%. You just don't want that one. So understand these things are all tracking completely the same. We can look at total return, and you can look. They're just tracking exactly the same. So it doesn't matter which one you get into. Just try and find the best one. IBIT has $19 billion worth of assets under management. FBTC has 10. You go into BITB, it has 82. BTCW only has 82 million. BRRR, which is the Valkyrie Bitcoin Fund, it has 536 million. So find out which one you can trade, find out which one you want, but get access to get into Bitcoin. Now here's the Catalyst Watch. You guys know Seeking Alpha. I love the Catalyst Watch. This is an email that comes out every Friday and it goes over every day. We have Volatility Watch, but it comes out Friday, so it is a little bit dated by the time you get to Monday. But this helps you over the weekend set up your game plan. IPO Watch, South Korea made Webtoon Entertainment. Australian natural gas E&P player, Tambourine Resources. You've got a bunch of these. Earnings Watch. We've got Beyond Air. All day, you've got Pan-L, Front, whatever you want. I mean, there's not much today. 1 o'clock, the Philadelphia Federal Bank Reserve President Patrick Harker will speak. Tomorrow, you've got quite a bit of earnings. You've got Baker Hughes. You've got Carnival. You've got FedEx. You've got an M&A vote. You've got all day. You've got some stuff going on. Datadog is holding its annual Dash event in New York. All day you have Crocs. Hold on. I'm going to hit record again. I'm going to take that out. All day you got Crocs. You got stuff. Wednesday, you have General Mills, Levi Strauss. The big one, Micron, will go over. All day Grail will be trading under the symbol Grail after the spinoffs from Illumina. And then Thursday, you've got more earnings watch with Nike, which is huge, McCormick, which is the spices, Walgreen Boots, which is a crap company. And then Friday, you got Core PCE Index, which is going to be the inflation. So you've got a big week coming up. A big week. Do you want to trade this week? I'd say with the Qs that high, we're probably looking for a little bit of a pullback, but you don't want to miss it. I'm not getting out of this market. One of the big things, Michael Dell posted up for Buckle Up with the AI stuff. And it was an article about, it was about the explosion of AI. And so I said, hey, Microsoft Copilot, can you just summarize this? Investing in stocks, careful consideration, technology, AI, it's important to do this. And it went over everything. You can, I don't know if this even worked. Yeah. Oh, okay. Well, so when you click on this, I think you have to go up to look at my previous questions. No, I guess there isn't. Huh. Yeah, I guess I didn't include the right one. Didn't include the right link. But I'll include the right link. I just asked it. You can do it yourself. Just ask, can you AI to summarize that. When the CEO of a company that you're invested in is talking and saying, buckle up, you want to know what that says. I read it. Go and read it yourself. Now, Google and Amazon, we can talk about it. With NVIDIA cooling off, these Mag 7 sweethearts are stepping up to the plate. These are wedges. Those are incredible wedges right now. Google is getting ready. It's up 3% in the past 5 days. Amazon's up 2%. We talked about Amazon. We talked about Amazon crossing that 188 and that's a key level. That 188 is a multi-year resistance level. It closed at about 188 and change. Let's see. It closed on Friday, 189.12. Is that enough to sit there and say, hey, we now have turned this into resistance? No, you have to hold above it for a little while. You can see here back in May, it closed at, its high was 191. And you had a couple of closes above it. But you can go all the way back here to 2021, July 2021. That was the highs. You've got a golden cross. I think this one turns into resistance at some point in time. The MACD is rather high. The RSI is high. At some point in time, this one breaks out, and you're looking at it here with Amazon and Google. Both of these are daily charts. So they're getting ready to take off. I like both of them, and talking about Google, when technicals and seasonalities align, Google. July has been by far the best month for Alphabet over the last decade. 90% win rate with an average return rate of 8.42. So when you look at Google, and you look at the 4-hour algorithm. The 4-hour algorithm got you in, I think, in the 160s, 178. And it was just earlier. This was June 6th. So, 10, 15 days ago? Somewhere in that neighborhood. You've got the MACD super low. You got the RSI, relative, normal place. Is it a good buy? Well, we can go over here and we can look at Seeking Alpha, and we can look at some of the financials. You look at these. The momentum. It's an A. Revisions, A-. You got 52 earnings per share up, 46 revenues up, only one revenue down, no earnings per share down. So you look at that, and it looks good. The only problem is the valuation, and the valuation is an issue. You've got the PE at 27, sector's 12. I would argue it historically is not a bad PE. Your PEG is 1.35. That's the forward PEG. 1.32 is the sector. So as long as they continue to grow, and I expect them to continue to grow. They do have a little bit of a danger with some of their search revenue getting kicked off. But I would say with 100% win rate or 90% with an average win rate of 8.42, you want to get this in June in order to sustain that July win. And that's what the seasonality brings you. Now, I'm a big fan of PanW. D.A. Davidson initiates a buy on Palo Alto. Palo Alto, part of the Daily Stock Pick core portfolio. Palo Alto, PanW is the symbol. It's at 319. I would argue that anytime this dipped below 300, you should have actually been a buyer. Is this crazy to buy here at 320? No. There's a nice gap up here to 360. This earnings reaction was an overreaction, just like this earnings reaction. People are finding out PanW has a plan. They're executing that plan. I do think that CrowdStrike will grow further, but I think PanW should be in your portfolio. Both of those should be in your portfolio. So, PanW. Microsoft, the first weekly bull MACD cross-up since November of last year. Microsoft, all-time highs. This one, you got to be a little bit careful of. This is at 449. You're bumping right up against that 450, which you did just last week as well. When we go and we look at this weekly, you can see it's just extended a little bit. But do you want to own this one? The answer, I would argue, is yes. At certain times, this one gets a nice catalyst up. It does get some catalyst down. But when you look at the seasonality of this one, we can see, let's look at the seasonality, and we're going to go back, not just the past 3 years, because that's boring. Let's go back to just after the the financial crisis here, and you can see this is 16 years. Look at July, 69%. Look at August, 69%. You have 2 months that are pretty much the top five months, and then you get into September. Now, if you want to wait till September to buy it, you can wait till September because then you've got a couple of good months too. I would argue that you want to add this in a month that isn't the greatest month. And with June being 53%, I would argue with this first weekly bullish MACD, that's probably a good time to get it. Now, NVIDIA, the resemblance is uncanny. We can see this chart. This is from January to February, and this is just a daily chart, and that's from May to June. What happened afterwards? Well, if you take a look at NVIDIA, and I would argue that NVIDIA at 123 is still cheap. Now, when you look at the 4-hour algorithm and you look at this, you can see January up, and then we had a sideways trade. And then from May up, and you may be getting a sideways trade here. And I outlined a couple of support areas for the paid newsletter subscribers. And so, yeah, I noticed that this MACD is crossing down. I noticed that the RSI is in no man's land. And I put out a plan in the newsletter. For the weekend newsletter, the Daily Stock Pick Core Portfolio, buy the dips on what names. The portfolio has been beaten, has beaten the Qs and SPY. It was 1 year, June 20th, I think, when I started the Core Portfolio in Savvy Trader. And here's the performance. And it's not a weighted portfolio. It's just 35 names that are solid buys. And with 100 shares of each one, I beat the S&P and the NASDAQ. So you want to make sure that, you can do that. I would argue NVIDIA, with the plan that I have, is going to do that. And so I'm not adding it in the core portfolio. Again, I sold 900 shares. And the reason is I only hold 100 shares in that one. So I like this one. I like NVIDIA. I like this chart. I think it's good. Now, the gap between growth and small cap is huge, but don't call it a bubble. Oppenheimer, they argue in this one that QQEW, which is an equal weighted NASDAQ 100, might be a good way to trade it. So QQEW, which is the NASDAQ 100. Remember, I'm into QQQQ. I'm not into QQEW. And the reason is I just, equal weight doesn't make sense to me. I like to weight my stocks. I have a huge position in Apple, but they're arguing that this one might make sense for you to get. Now, if we look at the weekly on this one, you can see it's kind of just broken out from this recent high of 120. It's at 124. The MACD is about to cross up. This is way different than the Qs. We just looked at the Qs. The Qs, the MACD was crossing down with an equal weight. Again, that takes that top Mag 7 trade, which pretty much runs QQQ. That pretty much runs, the top 7. If we just go over here and let's go over here and let's look at the Q, because I want to show you what the difference is. If we look at the Qs and we go to holdings, and you'll see Microsoft 8%, NVIDIA 8%, Apple 8%, Broadcom 5%, Amazon 5%, Meta 4%. And then your two alphabets, 2%, that adds up to 4%. And then you got Costco at 2%, Tesla. Basically driven by those. That's 50% of this portfolio is within, 10 names? 50% of the NASDAQ 100 is run by 10 names. Now, when you go to QQEW, which is the equal weight, the difference is stark. It's 1%. Those top 10 names are only 12%. It's only 12%. So it's not weighted. It's just 100, equal shares of the Micron is your number one at 1.51. NVIDIA is your number two. Broadcom. Apple is in here. I don't see Amazon. I don't see Google. I don't see any of those. And the reason is they're just not, weighted a little different. That's what they're arguing is equal weight might work with this one a little bit better. So here's an article. 8 breakout charts from the NASDAQ 100. I thought this was interesting. I thought this was, eight stocks. Let's see. There's ASML, TMUS, TDD, Microsoft, CrowdStrike, Synopsys, CDNS. I mean, let's just take the trading desk. And they're saying it's a breakout happening. I mean, you can look at it in the 4-hour algorithm. You can use this. I've said this before. There is a resistance level here, but they're saying it's a breakout. Well, we might have a breakout. Again, you have confirmation above there. Not really. It seems to be trading sideways for the last day or so. MACD's low. RSI, no man's land at 57. You could see that breakout. I've argued before that was, if you look at this, that was the previous high. And you didn't hold it for very long here in November 2021 before you absolutely broke down. This could be an interesting one. Again, that article points it out. I think it's good. Let's talk Micron. Micron earnings this week. They are coming up, and they are coming up. I think it's Wednesday or Thursday. Let's go to Earnings Hub, which is my favorite earnings site, and we can look at the earnings this week. There's 3, and I'll put a chart from Webull in there, but you can see here it's Wednesday after the close. Wednesday after the close, let's see what they're expecting. They're expected to post 46, which is an update. They were only reported 42 last time. So will they increase? This is high expectations. High expectations. So where have you been with these high expectations? Well, you've gone all the way up to 157. Right now, you're trading at 142. You're trading at 142, and you've gone all the way up to 157. That's a pretty big one. Now, do you have confirmation? No. This one is up 1.8% in pre-market. I would argue we're probably heading back down to this volume shelf here. Let's see. Let's pull the volume to this year where we can actually see it. We're going to take this volume right here. Boom. And we're going to pull this to, let's pull it where it really started to break out, which was this earnings. And we're going to look where the volume really lies. It lies between 110 and 130. My guess, you're going to use that 130 as a support level. So if you want to buy it here, my guess is that 130 provides you a good support level. You can see the value high. It's pulling up almost right to here to April 4th where it pulled back. It's pulling up right here to May where it pulled back. So you're looking at a pretty good support level of 130 right there. That's where I would be looking at this one. FedEx. FedEx is an interesting one because if we go to Earnings Hub and we look at this, they are reporting tomorrow after the close. This is an interesting one because they reported $3.86. They're expected to report $5.36. $22 billion in revenue. They only reported $21 billion in revenue. I would argue that this one is probably a risk that I'm not willing to take, but you could absolutely make a killing in this one. The benefits have basically come from cost cutting, not growth. And so this may be a bottom at historically 14 times earnings is kind of what I read about this one. It's under its 200-day. You had the death cross. They're coming up with their earnings. Nothing is extended in this one. I mean, it's not extreme extended, but I would argue with cost cutting being the main growth, if we go over here and we go FDX, let's see what the quant has as a hold, and it's the growth. Look at the growth. I mean, your revenues down 5% year over year. Your PEG, if we go to valuation and we look at the price to growth, I mean, it's significantly less than the sector. Your PE is not extended, but the growth is where it's at, and the momentum has sucked. You're down 4% over 3 months. You're up 2% over 6 months. I mean, think about how good this market has been and how bad that actual momentum is. It's an interesting one. And then Carnival, CCL, and we'll go over Nike as well. CCL, if we go to Earnings Hub, this one is reporting tomorrow before the bell. I would argue that Royal Caribbean is a better bet on this one. We can look at both charts. But CCL, they're reporting, and by the way, if Carnival blows it away, Royal Caribbean will go up and could just kind of, hey, it's a little hug. They hug each other. You know what? If Carnival goes up, then Royal Caribbean is gonna go Haktua. CCL. Let's go and look at the chart. They're expected to, increase. The debt has been the problem here. The revenues are at record level, free cash flow at near record levels, near good terms. Look at the difference with Royal Caribbean, which should be a better bet. There's a double top around 19.20. So here, this is the double top at 19 or 20. If we just look at this, here is the double top right here. Let's see. Let's go to a weekly because we can see exactly where. There is your double top at about 20. Once at July 2023 and then December 2023, you're trading at 16. Now, how does the 4-hour algorithm work? The 4-hour algorithm actually makes you 139% versus buying and holding makes you 62%. Algorithm has you out. Probably will get you back in right before earnings. This might be a good play. Honestly, this might be a good play. Carnival, they're expected to lose 2 cents per share. Last time they reported 14 cents per share loss, but they beat it by 22%. If for some reason, some crazy reason, this stock winds up actually beating and making money and has a positive and then raises, you're going to see a $20 stock. Now, Royal Caribbean, on the other hand, algorithm makes you 146%. Buying and holding makes you 275%. This is getting ready to again, cross up. And their earnings are coming out later in July. I would argue this one is probably a better bet. And the only reason I say that is I do like they're growing their ships. They're adding employees. I think this one is a significantly better bet if you're in the cruise industry. Now, I don't go on cruises. I think it's interesting. I just think it's interesting. And then the big one of the week is Nike. And I think it was Steph asked me before I got on the podcast on YouTube. She asked me, hey, what about Nike? I think it may be a sucker's bet before earnings, but I don't want to say that thinking that, it can't pop back here. Now, you've got an earnings gap that was created back in December, and it goes from 120 all the way down to 110. And that's just, a gap. You had a second earnings gap. That's between 100 and 95. You've started to cover this gap because you're at 97 right now. Now, do you get to 100? Maybe. This could be a nice 5% pop. But I don't want to overextend this one because it's a little bit hard for me to believe that Nike's going to engineer this turnaround. They reported 77 cents gain last time. They expected 79. They reported $12.43 billion in revenue. They're expected $12.04. So the bar is super low. If we go and look at Nike in the quant, it's a hold. And the reason is valuation. And this is why I think it's a little bit of almost a fool's game to do this before. I'd rather see you buy this at 100 and then fill the gap at 120 at some point in time than to see you buy this at 95 and have it go down to 85. I think 85 is your support level. But here in PE, you can see extended PE. And what's bigger to me is the growth. They are losing their revenue year over year, 1.89. That is horrible growth. Horrible growth. The revisions, B-, 23 revisions up, 1 down. As far as revenue, 8 revisions up, 27 down. The revenue is where the problem is. If for some reason they report the revenue as up and it's raging, you're going to see this one pop up to probably 105. That's probably where you're going to see it. But I'm not investing this one just to make sure, just to make sure you guys know, I'm not playing this one whatsoever. I am taking this week. I am taking methodically. I am doing very simple moves in my portfolio, and I outlined it here in my daily stock pick core portfolio newsletter. The newsletter is free for during the week. The weekend, you can get a free 7-day trial. So if you want to see what I'm doing the week, you can see, just get the free 7-day trial. You can read the entire, probably all of this section in a week. And so, if you want to support me, great. I love it. I thank you. But if you don't, and you just want a free 7-day trial, that's why I give the free 7-day trial. Because if you just want to read this stuff and you're getting FOMO, go ahead and do it. It's no skin off my back if you cancel. I really, really, I appreciate everybody who supports me. But if you just want to read, then go ahead and read. Take that free 7-day trial. Let's go to some requests. Jacob from Spotify wants me to look at Merck. Merck actually had a cross up. And the 4-hour algorithm got you in today. Jacob, I'm not a big fan of healthcare here. The only healthcare one there's two healthcare ones that are in the core portfolio. And so I would say United Healthcare and Eli Lilly. And Eli Lilly, the only reason that you're getting into that one is because of their Alzheimer's and their GLP-1 stuff. Now, Merck, they could get into GLP-1. They could come back up. I don't know enough about the space, but I'd track the 4-hour algorithm. It makes you 38%. Buying and holding makes you 53% over the past 24 months. Just got you in at 130. The average win is 7%. Maybe you'll make 7%. I just see a range there. But as far as liking Merck, I don't know whether to like it or not. I do know Eli Lilly and I know United Healthcare. United Healthcare, buy it under 500. At some point in time, it pops to 500. And so you can sell it. Merck, I don't track the stock, but you can see it's a hold in the quant. The valuation is D. Crown Castle, I went over. I am not a fan of REITs. CCI is the symbol. I'm not a fan of REITs. This is upper left to bottom right. I mean, if you want to invest in a REIT, if Jacob, if you're 77, 78 years old and you're looking for income, invest in a REIT. It's going to take your capital, but at least it's safe because you're going to create income. But as far as I wouldn't get into it. It makes no sense. So I don't like REITs. G Guarducci, typo, says 612 and says 621. Yeah, I fixed it. But great catch, Guarducci. Thanks for the advice on volume shelves. I got to listen to them more and trust the Bollinger Bands. Bollinger Bands are huge. If you guys don't know, again, in the core portfolio, on the newsletter, there's an education center section here. And you can just, look, I think it's dailystockpick.substack.com/education is what you can go to. And I go over everything that I use, all the indicators that I use. This is not a huge list of things. If you're going to pay $400 for a course, pay $40 for the month. Pay $40 for the month and start using some of these tools. This is all they're going to teach you in a course. That's it. My system is super, super simple. It's really easy, and Bollinger Bands are one of the easiest ways to do this. Let's just take an Amazon, for instance. It's down 0.27. Let's take the Bollinger Bands and say, okay, where did they cinch up? Let's look. Oh, they cinched up right here. Where'd you go? You had confirmation above. You went up. You came back down. They cinched up. It was below the confirmation. Boom. You didn't want that one. Now they cinched up here. You're above it. You had a nice little run. Now, if you're in that one, great, because you didn't pull back. Even though they cinched up here, you had a nice little pop. They cinched up here. Bollinger Bands are super, super strong, but they can't be used alone. You have to add in the MACD. You have to add in the RSI. You have to add in your moving averages. It's very, very simple. And again, I go over all of that. G. Guarducci, what do you think of JD, BABA, AAP? More of long-term buy and hold, but JD's revenue is crazy, higher than Amazon, even if their margins are only 2%. Amazon margin 6%. Michael Burry's top pick. I don't invest in China. I just don't. I've gotten burned over the past 2-3 years. I got burned when China chose their winners, and it's the government choosing winners. Let's be clear. It is the government choosing winner, and that's it. I don't think that you can't trade them. But I'm not buying and holding. Michael Burry has called the last 56 of 2 recessions. The guy is constantly picking bad stocks, but he's got $9 billion from one win. I'm not a huge Michael Burry fan. I think he's a genius when it came to that call. But if you watch the movie The Big Short, it took them years. They were just as likely to go bankrupt with that housing call than they were to actually make the $9 billion. It was sketchy. So I'm not a huge Michael Burry fan. JD.com, the algorithm loses you 41%. But you know what's worse? Losing 55% if you just bought and held. This is a stock that is upper left to bottom right. Could you time it? Absolutely. But that 50-day is still moving negative. I just don't like it. BABA it's below its IPO price of like 2014, I believe. But again, it's upper left to bottom right. It is not a good investment in my mind. It's got gaps all over the place. And your 50-day is still moving negative. Your 200-day is still moving negative. In my mind, I don't want it. I don't want to risk it. There are so many other good things happening in this market. I don't want to risk it. So Guarducci, if you want to invest in China, I don't think that, I'm not going to tell you that you're wrong, but I will tell you, for the past few years, I'd rather wait until it's moving positive and then get into it. One that's moving positive and has a buy is Amazon. Amazon gave us a buy at 188, 189 on Friday, where I think it closed. Let's see. Yeah. Look, MACD's crossing up. And if you want to look at the weekly on this one's bottom left to upper right. Even though you had a huge pullback, it's bottom left to upper right. And it's a good moving stock. MPLX. This is in the core portfolio. And this is a stock that is moving bottom left to upper right. And it pays a 9% dividend. This has going for another run. Google is in the core portfolio. This one had a cross up. It's going bottom left to upper right. This is a solid stock. So again, there are huge list of scans here. And some of the ones that I'm going to go over now are leveraged ETFs. These are upper left to bottom right. But understand, leveraged ETFs use options in order to lever them against their underlying asset. SPXU is a triple levered ETF for the long on the S&P 500. It is not one that you want to buy and hold for a long amount of time. This is a daily thing. So if you want to buy it, you just buy it. Again, you buy it at 29.31. You're trading at 29.36. As the S&P goes up, for each point the S&P goes up, this is levered 3 times. This is very, very low, SPXU, and it's the up. I think the SPXD is the down one. Let's see. Oh, stop. Let's see. SPX. XPX. What's the short? SPX. Oh, this is the short. SPXU is the short. That's why it's going bottom left to upper right. So we might see some weakness. I mean, that was interesting to me, that SPXU. But the other one that got a buy in here is SQQQ. And this is the short of the Qs. Again, it's bottom left to upper left to bottom right. And this got a buy in at 839. You're at 846. So are we going to see this turnaround? Maybe. Hibbs is short. PSQ is short. SDS is short. TBT, TECS. All of these are short. So we got a bunch of leveraged ETFs, that short ETFs that just crossed up. Tells me that the market might be ready for a little bit of a turnaround, and we might be seeing a little weakness. And I went over this again in the newsletter, in the paid newsletter last weekend. I was maybe 1 week short, but June's rally may set things up nicely for July. So I do think that we see a huge July. And again, I'll bring this up, and I brought this up before. QQQ in July, when we look at the seasonality, and we go back 16 years, it's 100%. Your mean, 4.63%. So at some point, I think you buy in June, which is 53% win. You buy in June, and then you set yourself up for a big July. I think that's it. So if you have any questions, again, Linktree is where to go. The link is down below. I sell TrendSpider. I'm an affiliate of TrendSpider. Seeking Alpha Premium, you've seen me use all of these tools. All of these tools I've used. The TrendSpider one, if you click on it, you can get it for $53 a month, which is crazy for the amount of power that you get in the charting. I provide you my 4-hour algorithm. I provide you all of the watch lists. I provide you the scanners that I use, everything. You can get the enhanced if you want. This is the biggest difference between the standard and the enhanced is that you only get 30 alerts, which, remember, that's about 15 stocks, because if you want the alerts, I always do for a buy and sell on the one stock, so you get about 15 stocks that you can track. Enhanced, you get 100, which is 50, which is plenty. But the other one is that you get 30 max alert lifetimes, which means 30 days. It only lasts 30 days. So every 30 days, you got to reset it. Enhanced, you're allowed to do 90. That's the big difference. And if you're just doing a shit ton of stuff, get the advanced. I mean, the advanced is, the other thing that comes with advanced, which I actually think, could benefit a ton of people, is the unlimited one-on-one training. Unlimited one-on-one training from TrendSpider. And again, you could downgrade from the advanced. You can get the advanced and pay for the year. And then, next year you just downgrade from it. So whatever you want to do. But again, TrendSpider is my platform for Seeking Alpha Premium. If you want the quant stuff, if you want to look at stocks and you want to look at ETFs and you want to look at all that stuff, this is a 20% off premium membership. So when you use my link here on Linktree, it's the second one. You get 20% off. And then there's Alpha Picks. I'm going to do a video on top 5 Alpha Picks here, and I'll do it I'll edit it together. But it's, this is just 2 data-driven stocks a month. If you're tuning in just to see what stocks I like, this is a better portfolio for you. It's 122% return versus the S&P at 35%. It's just it's a great portfolio, and you get access to it day one. You get all of their stuff, and they do constantly. They do updates on their portfolio, and they do kind of just look at the current portfolio, and they say, this is why we're still in this one. This is why we're still in this one. This is why we got out of this one. So I think it's a great buy and hold program. So that's it. If you have any questions, hit me up. I'll be back tomorrow. See you. Bye. Okay. This was a short one because I sneezed and did a bunch of stuff. But I do have to go in. Oh. Anybody have any questions? Any questions? Haktua. If you didn't see Haktua, let's go over to I'll show you my favorite one. Twitter.com. Let's go to mine. My favorite one is my favorite one. Talk to his dad right now. This is my favorite one.
Man go crazy every time. What's one move in bed that makes a man go crazy every time?
You gotta give him that hawk to it and spit on that thing.
I'm gonna come.
What can I say? Bit the cobweb.
That's my favorite one. It's just Brandon, it was some girl, and I think it was from like 2 years ago. I don't even think it's new. I think it's from years ago, but his VP is going to be Vivek. I think that makes sense. I mean, Vivek was the first one to come out. Star. I mean, we saw what the split did to Nvidia. You saw what the split did to Walmart. You saw what the split did to pretty much everything. I think you're starting to see this gap get filled. I think you may come down to probably, I'd say, 1,600. But the split is right here, July 15th. I don't think it's crazy to think that we continue to get some strength out of this one. So I think Broadcom's not a bad buy. I haven't added to my position, but I haven't sold my position either. I do want to add some in my retirement portfolio. But I think, again, I kind of go with this guy. Hold. This guy, from Friday says it's just the beginning and they should buy. I'm kind of in that camp where I'm just holding it. I don't think that, the peg forward is a little bit high. I mean, their growth is a B+, 21% year over year. That's pretty freaking good for revenue. profitability. They've got a 74% profit margin, gross profit margin. If you're looking for me to say, hey, it's going to explode, I'd say look at the history of splits. It looks like you probably are pretty good at buying. But I'd say right now, it looks like there's weakness. I'm not buying. Let me make it this clear. I typically don't buy when there's not confirmation. And the Bollinger Bands, it was clear. Look at the Bollinger Bands, how far out they are. You were trading at the top of the Bollinger Bands here at 1800. You were trading at the top of the Bollinger Band. It had to come down. Now your Bollinger Bands are cinching up. I mean, it's a little bit extended as far as the valuation. Is that crazy? No. NVIDIA, you're down at 122. So, interesting. Oh, is it? FFIE? Let's see. Yeah, it don't look good. Let's look at the 5-minute. This one was pretty good on the 5-minute going back a couple of days, but it's down now. You'll only lose 1%. It got you out. At least it got you out. Backtesting started here, so it got you out. You're not in. But I don't know. Is FFIE? Oh, I was going to go over the stock screener. I'll go over that tomorrow. Let's do. I'm going to do a new one. Tuesday. FinViz stock screener. I don't see anything on FFIE. Let's see. Any news? 7 penny stocks to sell before they crash and burn. I'd agree that Faraday is one that's going to crash and burn, but Meta under 500. I mean, this is because Apple is saying that they're gonna, run them in just like ChatGPT. You're gonna be able to pick Google, ChatGPT. ChatGPT is gonna be at launch, and then they're gonna say, you know what? You can go to Google. You know what? You can go to Meta. So they're doing it smartly in that they ain't paying for this development. They're gonna say, oh, you want to go to Perplexity? You want to go to whatever? They're going to do a bunch. Okay, it's 10 o'clock. I'm out of here. Haktua. Take care.